everyone. My name is Lili Zhao. I'm the director at Neo Global Development, which is the operational arm for the open source Neo blockchain. Today is my great pleasure to be here to moderate such a distinguished panel on the topic of digital asset ecosystem, where it is now and where it is going. Now I would like to welcome my fellow panelists to kindly introduce themselves. And let's start with Juwan and Anton, who are also the organizers of this amazing Singapore Blockchain Week and this fantastic panel. So please, Juwan, and then let's start with Mathias and Alistair, who are both based in Singapore. Thank you, guys.
Thank you. My name is Juwan Lee, and I'm the founder and CEO of NexChange. We are a digital merchant bank, and we're also the co-organizer for Singapore Blockchain Week. And my background is I spent 30 plus years on the buy side, and I'm very excited to be on this panel today.
Thank you, Juwan.
So again, it's a pleasure to be here in this virtual setting, a new experience for everyone and myself. And to introduce myself, my name is Anton Golub. I am the founder and the CEO of flovtec. We are a Swiss quantitative investment firm, and our focus is on providing liquidity for digital assets. In terms of what we do is we work with exchanges and token issuers on providing liquidity, either for a designated marketplace or for a specific token. And on the other side, we also offer investment products to professional and qualified investors. We do that under the Swiss regulatory framework in a fully compliant way. And similar to Juwan's experience or background, I say in my previous life, I was a hedge fund trader, basically doing high frequency trading in the foreign exchange markets.
Thank you, Anton.
Hello, everyone. My name is Mathias. I'm co-founder and co-CEO of Sygnum. We are a bank for digital assets, and we offer traditional banking services for digital assets. That's cryptocurrencies, stablecoins, and asset tokens. I'm very excited to be here and interact with you guys.
Thank you, Mathias.
Hi, everyone. My name is Alistair Duff. I look after APAC for the Swiss Digital Exchange based here in Singapore. Previous to that, I had been at various startups, including setting up R3 in Singapore back in the day. And for most of my career, I've been in electronic trading in banking. Thanks for
Thank you.
having me.
Thank you, everyone. We have lots of experience on this panel, and also the key leading digital asset ecosystem players, from Neo as the digital asset platform to digital asset exchange and digital asset bank, liquidity providers, and digital asset service provider. So before we start this discussion, let's first define terminology. What is digital asset? I see in this space there's some interchangeable terminology being used. Some use digital securities or tokenized assets. I personally think digital assets is more inclusive, because digital securities is quite limiting. Securities, not all assets are securities. Some are commodities, some are utility tokens. So from a protocol's perspective as Neo, and I would say digital assets are tokenized assets running on a blockchain. They are smart contracts. And I see from SDX's website, it defines digital assets as smart contracts in a trusted repository. All asset properties are directly captured in the token. So I gather that we have the same understanding of digital assets. Alistair, do you want to comment on that?
Yeah, I think the 6 SDX have that. That's a good explanation. I do think it's kind of interesting, though. You know, for those of us who are in the start of the blockchain space, although now, as with any new technology, you get a whole bunch of different terminologies and for new technology until it settles down. there's a bunch of different names on this depending on what community or even which jurisdiction you go to, but it's not as politically charged as the old blockchain versus DLT debate. That was always quite kind of heavily debated. But I think that's a good explanation. To me, it's simply a token, it's a token that represents an asset or a legal agreement between two parties that's on the blockchain. I think that's the easiest and simplest way to think about it.
Great. And Mathias, the Sygnum as the world's first digital asset bank. How would you define digital asset?
Yes, I agree with everything that has been said, but taking a step back, I think the most easiest way to think about it, or how we do it, is to really differentiate between counterparty-less tokens. These are tokens that don't have a right against the counterparty. And the easiest check is you can basically just say, you can't call a Bitcoin company, right? There's nobody you can call. It's a fully decentralized network. So it's decent. This is a counterparty-less token. And if it's a token which subsumes a right towards a counterparty, for example, a tokenized or a digital representation of a company's shares, then this is a token with a right towards a counterparty. And at Sygnum, we've created a framework which is called blockchain crypto property, and blockchain crypto property 1 is then the latter the former I referred to, and the tokens with the right towards a counterparty, the latter. And why is this so important for us as a bank to really very clearly categorize it? It's because for everything we do, of course, we have to rationalize it for the regulators, that it fits into all the legal proceedings.
Yeah, absolutely. And Anton, so digital assets liquidity providers, how would you define digital asset?
Yeah. So I want to say that I very much agree what Alistair has said, and also what Mathias just mentioned in terms of the classification, how digital assets can be viewed differently. And I will actually bring upon something that Mathias and myself had discussed maybe a long time ago, and provide the context of the history, how I see digital assets. That, you know, since the birth of internet, we kind of always thought, how can we move or send assets the same way we send emails, or the same way we send messages? And there was a challenge the whole time to understand, well, you know, emails can be easily copied, pictures can be easily copied, you know, when you send them on the internet, but that's not really the quality that we like to have for assets or for money or digital money or tokens, right? And I think it was even Milton Friedman, who was a Nobel Prize winning economist, who had the same vision that one day we'll be moving money and assets over the internet, but we had this challenge of copying it. And the first prototype that showed that this is possible and that it works in a safe, secure, trusted, and fast way was the blockchain of Bitcoin. So this is actually first time where we built an infrastructure that was a proof of concept, showed it works, and the asset that we moved was actually Bitcoin. And also people kind of know their history. There was attempts to do that even before Bitcoin and blockchain of Bitcoin. It was called BitGold. It kind of didn't work for many different reasons, but we kind of found that solution. And we said, okay, the proof of concept is here actually. But, you know, all of us have a vision and understanding that this technology can be used beyond cryptocurrencies. And then kind of the next iterative attempt was utility tokens. And kind of we are now trying to pass that next hurdle where we really put real world assets on the blockchain and exchange them and transact them in a safe, secure, fast, and trusted way.
Thank you, Anton. So Juan, so you have both an inside and outside views as digital asset service providers. So you encounter different ecosystem players. What's your perception of digital assets?
Well, I think adding to everybody else's comment, maybe the best way I can describe it is that a digital asset doesn't necessarily have to be decentralized. It can be, but I think oftentimes people think that, you know, it is by virtue it has to be blockchain. I think it's important, and the way I would differentiate it is a digital asset is innately programmable. In this way, I would define it.
Thank you. And so the blockchain is an enabler for this digital asset to be programmed. So for the simplicity of this discussion, let's say we're talking about digital assets, programmable and tokenized on the blockchain. And it's really fascinating to get everyone's insights. So now let's move forward. Talking about digital assets, I would say currently one of the most popular one is the central bank digital currency. And I think Sygnum has digital Swiss franc, and also Six Digital Exchange is also working with the Swiss National Bank. So I would like to really curious to learn from the panel. What's your view on CBDC or LIBA? These are central bank and enterprise-led digital assets. Do you think they would crowd out community-led cryptocurrencies such as Bitcoin, Ethereum, Neo? Or do you think actually in the long term, they would strengthen, they would benefit the community-led digital assets because there's more public awareness and public acceptance of digital assets and blockchain adoption in general? Who wants to start first? Let's.
I can maybe start because you mentioned or DCHF, and maybe giving some history. Why did we do this? When we conceptualized it in 2018, because we knew we can only leverage the benefits of digital assets tokenization, particularly of asset tokenization, if we have a means of settle the assets, also leveraging DLT, and not then again being dependent on the legacy fiat infrastructure. So at that point already people said, but you know, why would you do it by 2020? Then there will be the national banks will be ready, or the stock exchanges will have these tokens. But fast forward right now, we are very happy that we have done that and have learned along the way what it then actually means beyond just creating the token, but actually implementing it into banking processes, integrating it in the systems, in the core banking systems, etc., and creating all the user stories. Having said that, also for us, we hope very much that there will be, the national exchanges, the national banks will come up with scalable, broadly accepted such settlement coins. But I think it will take a bit longer than we may now even expect. And as a community, we cannot wait that long to finally prove that we can do it. And for the digital Swiss franc, all we do is just conceptually that everyone can kind of frame it, is for every digital Swiss franc we mint, we actually deposit one and block one Swiss franc with the Swiss National Bank. So in that sense, it's as closest to the source, and it's audited continuously, so that we feel it's a very kind of trusted and secure way of actually.
Would we discontinue this when Swiss National Bank and SDX issue the digital Swiss franc?
Yeah, very much. So let's say in 7-8 years, when this really works at the scalable level, then I wouldn't mind if we then feel that there's billions of dollars on another chain. Then we don't necessarily have to continue. The market will then prove which coin makes most sense. But I think it will take much longer, and we want to have scalable tokenized asset tokenization projects live, end of this year, beginning of next year. We can't wait. So that's why. Yeah.
Yeah, I think that's Mathias's point. I think that's true. Central bank digital currencies will take time. But if I look back and the work that you're doing is fantastic, because you're hitting it hard, and it's a really crucial part of getting our ecosystem going. So that's it's fantastic work that's being done around that space. They will take time, but if I look back, so I started Project Urban actually with our CEO of SDX now, when we're both at R3. In Singapore, and that was 4 years ago. At the time, it was really punchy. It was a test, but it felt very punchy. And you look 4 years on, and 70% of central banks are working on some form, shape, or form of a central bank digital currency. If you think about it, these are the most conservative. Anyone's been in the industry working with central banks. These are the most conservative institutions within capital markets. And to see that level of interest is fantastic, but it will take time. We are working with the with BIS and the Swiss National Bank on the digital Swiss franc. Obviously, we have conversations with various other central banks around the world looking further down the line on cross-border settlement. But to get this in the short term, we are looking to go live next year and get with our FINMA license, and the good work is being done to get corporate coins, stable coins in place to allow the system to fully function. I think is fantastic. So we're going to see these various stages evolve.
If I can add a little bit to this, if you look at the evolution of technology and if you believe that digital assets is a long-term play, generally a new product, new players come into a market and grow it massively and does not crowd out, let's say, the other players. The other players will grow and it will expand the market, bring more awareness to digital assets. We're in such an early stage, if you look at the market capitalization of the size of digital assets relative to the other assets, that it's really not about market share squeezing from one player to another. I think what we really need is strong, viable projects like the Chinese version of the sovereign digital currency. If you see that environment where China has set up a stage where mobile payments is already an integral part of the overall way things are purchased, then it builds a very important ecosystem that allows for the next step, which is the digital currency. And the way I look at it is that you have to have the right pieces in place for it to accelerate. I think certain markets probably will adopt faster, but it's if you look at it from a perspective of time, it will take time, but I think China will probably be earlier than other countries.
If I can jump actually and share my 2 cents on all of this, I have to say what was really starking for me that I learned over the last couple of years talking to people on the regulatory side and with the central banking side is that the end users in the foreseeable future will not interact directly with digital currency. This was actually quite starking for me because this is the opposite of the vision of the blockchain, is that you have direct ownership of assets. And if I kind of have to explain that, what I mean by that is that I always thought that in the future, you will have a bank account with the central bank. So this is actually that you will have a digital wallet where your currency will sit exactly on the balance sheets of the central bank, and you will not have the counterparty risk of the banks in between. And this was actually quite starking for me when I spoke to people who are on the regulatory and central banking side. They told me that that's not how they see the future in the near term. In the near term, you will have a regulated players like Sygnum, like SDX maybe on the custody side, and they will actually hold the assets for you. That will maybe in the end be the liabilities sitting on the central bank side. And this is for me quite starking, is because that's not how actually the system evolved. If you kind of remember 6-7 years ago, we started with BitShares, we started with Omni layer, Omni protocol and Tether, and we were kind of experimenting with these things when we always thought, well, you can have digital currency in your own wallet, but that's just not going to happen in the near term. And for me, it was quite a stark revelation. But looking at the ecosystem players here, like Sygnum, like SDX, I actually feel comfort that that's maybe the right way to go in the foreseeable future.
Yes, thank you for everyone's insight. I also share this sentiment. This ecosystem is still very, very small. And it started from the bottom up, community-led, and now we have a top-down central bank's involvement. So, and overall, this will really grow this ecosystem. So speaking of this ecosystem, we have here from protocol and from bank, exchange, liquidity provider. So how do you see that each of us playing a role in growing this ecosystem? Maybe I can even start from Neo. So Neo is a digital asset platform, and we are building the technical infrastructure and providing tool sets and setting standards to make digital assets tokenization easier and more accessible. So you can write smart contracts on NEO with standard programming language. And in fact, very recently, NEO and also our friend SDX, together with some 3 other leading industry players, we initiated Interwork Alliance to accelerate the token economy, to provide the token taxonomy framework. So the head of the Neo Global Development in Seattle, John Devados, and also head of SDX, Tim Grant, 2 of the industry veterans are also on the board of this alliance. So aside from the tech, we also have Neo Eco Boost, which has allocated $100 million USD to support this the Neo ecosystem, to support developers, the apps, and the overall ecosystem. But the tech is only one part of the story. So in this ecosystem, to grow this, we also need you guys. We also need the regulated, compliant financial ecosystem to make tokenization really take off. So maybe let's start with Mathias. So you can share some perspective from a regulated digital asset bank's perspective.
Yeah, so our role, I would define our role as helping to bring trust to institutional grade trust to the ecosystem by providing custody, issuance services, the gateway, the fiat digital asset gateway, but also a Lombard loan and credit facility where we take digital assets as collateral to the ecosystem. And why I believe this is important is in 2017, right, we all were super pumped up and we felt there's something big is happening, there's a huge hype, but then it was a bit detached from reality. And that's also because players didn't have access to bank accounts, etc., didn't have access to the payment rails, were not treated fairly. The traditional financial world could not judge the risks and did not know how to deal with these risks. And that's why we feel we need to follow a future has heritage approach, right? Future in the sense of what you have said, right? What NEO is doing, what many other great projects are doing. It's really pushing the boundaries towards a more decentralized world. At the same time, we need players which help to link this world with the traditional financial world to bring about adoption. And we feel that is a role that we want to play. If you look at our mission is, and you may feel this is weird to say that as representing a bank, but our mission is to empower people with more direct access to ownership and value. So we very much share that exact same vision, but we feel we need to do a step-by-step approach to bring about the change and bring the volumes on the platforms to get there.
I think this ecosystem, as it's forming, is actually huge. But if you look at what we're actually trying to do and the possible implications for capital markets over the next 10 years with digital assets, it is itself huge. So it is a very large ecosystem. It's funny because people tend to see, because we're an exchange, they tend to look at us as a Swiss financial market infrastructure. And really, and this ties in with our own our vision statement, which I'll read out here, is SDX is a next generation financial market ecosystem that empowers everyone to translate their ideas into impactful commercial realities. So, we really believe it is an ecosystem. It's a global ecosystem, but it is a very large ecosystem.
Yeah.
Which we're working with partners like Sygnum, but also, it's tech companies that we see through the F10 incubator. It's through to central banks, it's regulators, working very closely with regulators. It's really such a wide and diverse ecosystem. So it's starting to really form and take shape. But a rising tide raises all boats.
Absolutely.
And it's not a job anyone can do on their own. Everyone's got. There's a lot of companies here a part to play, and that we should be looking to partner with.
Thank you. It's a gigantic ecosystem. So I'll pick your brains more on the SDX as ecosystem. Now, yes, Anton and Juan, your views on the ecosystem players?
If I can just make a comment about value. I believe it's important to understand that things in the ecosystem, the priorities sometimes are driven by the size that it can potentially become. And if you look at where we saw with internet, with the, you know, HTTP and TCP/IP, which really basically captured almost zero value, while the FANG companies like Facebook, Amazon, Netflix, Google, I mean, they're worth multiple billions, right? So what we see that's happened in the blockchain space is that the protocols, if you take Bitcoin as a protocol, it's 100x bigger than the exchanges. So where I think is important is that we need to start to see a movement that is geared towards more use cases. Those use cases and those use cases have to become a bigger part of the growth of the ecosystem. Why am I using blockchain? Well, there's very specific products that I can use on the blockchain. So the exchanges play a very interesting part, I believe. And they serve as a means where they essentially can accelerate things in the ecosystem through strategic investment, project empowerment, you know, providing, you know, various different elements where you can grow the smaller players within the ecosystem. And I think that's an integral part of how to make this ecosystem grow.
Yeah.
I will just, you know, also remark on that actually. And I firmly believe that the blockchain and digital assets have a massive potential going forward. And I always reflect to it, kind of going backward when I started back in 2013. If I have to tell you, the whole market cap of digital assets, which was at that point cryptocurrencies, was 1 billion. So can you imagine it? You know, coming from the FX markets where we trade trillions per day, I came into an ecosystem where you had the whole market at 1 billion. But over these 7 years, actually, we kind of now, if you take a look, we're around 250 billion. So if you just kind of do the math, you realize that the digital asset ecosystem is more than doubling up each year. And that's where I see, you know, this exponential growth as exponential trend. And when people throw big numbers saying, you know, in a couple of years, you'll have trillions on the blockchain, I firmly believe that. And one thing that I always try to reflect on myself, and that I heard actually from one of our speakers today, when the question was decentralized or centralized, what's the future, you know? And then I always think, okay, but in the future, if we are really going towards this decentralized space, what's then the role of an exchange if we trade peer-to-peer? Because that's actually what's possible with this new infrastructure. If I can have direct ownership of assets, what is the role of a digital bank and a digital custodian? If we can actually automate liquidity provision within a protocol, what is the future of flovtec actually? And this is something that I always try to reflect on, because we have a certain view how the things will evolve. But if we just reflect how internet evolved, if you spoke with someone 10, 15 years ago and told them, you will have an international conference and, you know, people will join over a smartphone and with a perfect camera, you know, and a perfect image, and it's going to work smoothly. And you would tell them, come on, you're crazy, that will never happen. But here we are. So I'm putting a big question mark around us, you know, what's our role far, far into the future, of course, and how that will look like.
So thank you, Anton. That's a very philosophical question. I think that's what makes our industry so exciting. All of us sitting here, we have the chance to shape this industry because it's so new. So the future is, you know, I don't have a crystal ball and I wish. So, but now let's talk about the current, the present. I'm really curious, flovtec, your expertise is providing liquidity. Everyone understands the word liquidity, but most people, we have no idea how you provide the liquidity. So this is a very institutional game. So can you share with us your magic, your tricks? How do you provide liquidity?
Yeah, happy to do that. And let me first kind of explain it in very simple words, where I had to explain it to my father what his son is actually doing in Switzerland, you know, and his business. So liquidity, in simple words, means that you have the ability to buy or sell an asset at any time at fair price with low transaction costs. So this is literally what liquidity is. So if you kind of have to imagine it, if you are an institutional grade investor or a professional investor, maybe even a retail investor one day. That means whenever you want, you can click the buy and sell button, sell it, be sure you get the right price, you get the fair price, and you did it at an extremely low cost. This is basically what liquidity and liquid assets mean. Now, then you can ask me, but how does that reflect actually towards the end users? Because you have kind of a lot of stakeholders here. You have exchanges, you have custodians, you have digital banks. And with whom does the liquidity provider work with? And exactly as you identified, we actually worked with other stakeholders. So in particular, we work with exchanges, where we actually work on mandates, where we get assigned that we actually provide liquidity in a specific way for a specific asset here. And likewise, we then engage with token issuers. So it's again B2B business, where you directly engage with a token issuer with the vision that you create that their digital assets liquid, that you provide liquidity such that the end community benefits. Now, if you ask me, well, how does this work in practice? I just said fair price, low transaction costs, at all time and so on. So that means actually that we run an infrastructure that's safe, secure, fast, and robust. It runs 24/7, which is quite contrast. So even today, on Saturday and Sunday, our infrastructure runs. And we have algorithms that actually provide those prices at all time. Yes. I will now dumb it down a lot.
Yeah. I know you have a bunch of very smart quant guys sitting in the office.
Yes.
Yeah.
Exactly.
Yeah. So this all sounds really healthy injection to the digital asset ecosystem. But there's also a misconception about market making activities. So which is not quite it's a gray zone. So how would you distinguish the difference between these healthy and necessary liquidity providing solutions to the shady market making activities?
Mm-hmm. So really kind of, if I have to provide a guideline for the stakeholders who are the right players and not, and really the real answer here is actually, are the players that you're involved with doing that on a regulated and fully compliant way? Because, the activities that are not useful and not benefit for the digital asset ecosystem, some involved like wash trading, faking trades, moving the prices in a certain direction. These are kind of all the diseases that even came from the long time ago were present in traditional financial markets, but they were always stopped actually by having an understanding that you need to do everything in a fully regulated and compliant way. So this is actually, if I have to give a judgment call, it's actually working with regulated players, working with compliant players, and that's the way to go. And that's actually how to involve the shady or activities that are kind of considered to be in the gray zone.
Then would you say the difference lies more on ethics rather than techniques, because the techniques employed could be very similar, and which is why lots of people confuse or they don't distinguish the two.
Exactly. So it's all about having the right governance within the liquidity providers, the companies that offer liquidity, having the right processes and the right regulatory framework to do that. Because the regulatory framework in that sense is very clear what you're allowed and not allowed to do.
Okay, great. Thank you. And now back to Alistair. So the ecosystem, SDX as the infrastructure ecosystem. So that's really a gigantic ecosystem. At the SIX Stock Exchange, your parent company owns, it has 126 or 162. I don't.
I think it's,
so
it's
you
a
have
lot. 122,
yeah.
I think, actually.
Sorry?
I think it's 122.
Yeah, 122 banks. So these banks are members. They're also owners of SIX Stock Exchange. So you have a massive ecosystem. And with SDX, do these members of SIX, do they automatically are also members of SDX? And then you also have a new members, new partners for SDX separately. What's the criteria to be a member of SDX? And also, we read that SDX working on products and projects, so but not too much details. So could you kind of share some insight, what kind of products and projects you're working on? And also, let's say if I were to suggest to launch a ETF or ETP with assets containing NEO or other token assets, then how would the process be to launching such products with SDX? So basically, how does SDX ecosystem work? How can we be a partner? How can we work together to launching products and projects?
Okay, a lot of questions in there, but I'll try and answer as succinctly as
Was ready.
Yeah, so we do have, so SIX is a member exchange, but SDX is a separate entity. The Swiss Digital Exchange is a separate entity. So there'll be no automatic movement over of membership from SIX members. This will be new members who want to sign up to the Swiss Digital Exchange. To be a member of the Swiss Digital Exchange, SDX, you do need to be regulated by FINMA. So this is an institutional exchange. The benefit we do have for our SIX members is that the crossover is very, very straightforward. The connectivity is already in place with SIX, so we'll be able to capitalize on that. And even the front end, the GUI, the trading screen, existing SIX members who also sign up as a member to SDX, they'll have Novartis on one part of their screen, which they can go and execute, and they can then pull up a digital asset or whatever it may be at the time and execute off that same screen. So I think the transition will be pretty, it's going to be pretty lightweight for existing members. Now, in terms of what we're building, obviously you said you found it hard to get too much information. I'll give you a broad overview. Our priority really is our FINMA license. So we're building out a regulated exchange and CSD to be licensed by FINMA, and that will come out early next year. So that's kind of where most of the our resource and focus is. We call this the foundation layer, and within that foundation is our work with BIS and the Swiss National Bank for central bank digital currencies, because they're kind of the foundation of what we do. We also have our partnerships, and really I'd put that more on our product. So the two products we're focusing for Go Live, two classes will be equities and bonds. But that's kind of the first step. That's to get our exchange and CSD up and running. And then we'll be looking at other bankable assets. So stuff that we may not have seen so commonly before, but looking to develop products like, these are more examples to give you examples, but of other bankable assets. Could be stuff like structured products, for example. You know, there is a demand out there to have more secondary market liquidity, and that's one of the promises of digital assets. So there are products out there that we'd be looking to develop that don't necessarily have an active secondary market at the moment. And then you go into the third kind of, so you have the equities, the bonds, the other bankable assets, and then non-bankable assets. So I think it's really interesting, because if you look at the assets globally, non-bankable represents about 70% of that, and they are virtually very, very difficult to trade, very illiquid. So real estate, for example, commercial real estate or art, and we'll be looking to, working with our partners to develop new products through there. So we have the foundation layer, we have the products we're working with clients at the moment to drive forward and to look to issue. And then finally we have, which we talked about before, the ecosystem. So those are kind of not pillars, but three core components of what we are looking to deliver.
Great.
Yeah. Carry on.
Yeah. So first the FINMA license, regulatory, and then growing the ecosystem and partnering with different partners to and then build the products with partners. Yes.
So we are building on, we are working with R3, we're building on Corda. And as I said, you need to be a regulated institution to be part of SDX, to be a member. But we will see startups working with members to deliver new products. And obviously this is just the start. You know, we are all wanting interoperability in the future. We're still some way off. But once, our view is and our ultimate aim is to be interoperable amongst, all the major protocols, and that will really help. So it's grand ambition, but small steps to get there, and we want to be delivering early and often with real commercial value. But that's the end game.
Yeah, speaking of interoperability, NEO is also working on interoperability protocol. So, let's hope we can explore some synergies in the future. Thank you very much for the insight, Alistair. Really helpful. And now I have a question for Mathias. And so we were talking about Sygnum as a regulated bank. You mentioned different business activities. So I see from Sygnum's website, and you have banking. You offer banking solutions such as custody, brokerage, tokenization, asset management, lending, B2B banking. So which of these business lines would you say are growing most promisingly, and which ones are less so, and why?
So right now the core business from an immediate revenue generation is really the custody and brokerage, the trading on the platform for the major cryptocurrencies, not the tokens, not the asset tokens yet, right? These are with crypto foundations, with brokers, asset managers, and qualified private investors. So we are not a retail bank in that sense. It makes more sense to trade on Coinbase or Binance for smaller trades. We are really tailored towards larger deposits and larger trades in an institutional grade setting. Oftentimes, before a client onboards with us, they would send their auditors to actually look at our ICA certification and our processes, etc. Then feel comfortable. So this is kind of the focus. On the tokenization side, it's really we are revenue generating, but the revenue generation is project based, right? So we are working right now with 5 players. We feel will be lighthouse projects. We can then really go out and prove to the world that tokenization works in an integrated fashion. And when I say integrated, and that's what we're really focusing on, is not just the tokenizer, or not just the custody, or not just the fiat on-ramp, but really in an end-to-end fashion. So it will be easy for investors to onboard, to buy these assets with the digital Swiss franc, etc. And of course, we are very much hoping then the moment SDX goes live, that we can also collaborate with them and become a member and have our assets listed there as well. On the ecosystem side, we are working. As you may know, we have 2 joint ventures on the custody side with Swisscom, and via Daura actually also with SIX, where we do particularly on the equity tokenization, create the legal anchor around it. So that's done with Daura. And what is interesting there, because you mentioned interoperability before, we are following a dual approach. So philosophically, I would say the team is very much geared towards public permissionless blockchains. Also me personally, I believe in 10 years people will look back and realize that actually makes more sense to use permissionless blockchains. But we also at the same time, and hence we're quite proud that, for example, our digital Swiss franc is on Ethereum and we got it through FINMA and etc. But we also appreciate that some players, as they want to tokenize, they will want to have more kind of centralized protocols, the Swiss blockchain, etc. And hence we follow that dual approach. For our clients.
Great, different spectrum. So you mentioned you work with 5 players on tokenization. Are you working on 5 players on 5 products, or you're working with these 5 players to create one product?
No, I can specify a little bit. So one is on tokenizing real estate and really thinking it through end to end. Another one is with a large independent asset manager with really 65 billion assets under management, really major operation, global presence, that has decided to to create a multi-year tokenization project, starting with tokenizing equity, then bond structures, then including it in their advisory, and then distribution to their investors. So that's now the first stage. Then there is with two banks also on the one hand, it's digitizing a certain trading venue that they already have or helping there, and on another one it's on fund tokenization. And these are various stages of development. Some know this will take a year until it actually goes live, but we are the partner to help them get there, and also they can leverage some of our infrastructure. So that is our play.
Great, very diverse different projects. And Sygnum also has heritage both in Switzerland and Singapore. You are based in Singapore. So how do you see the difference between these two different jurisdictions in terms of a digital asset ecosystem? Very briefly. Afterwards, maybe Alistair, you're also based in Singapore for a long time. Maybe you can also comment on that afterwards.
So funnily enough, I actually now I'm in Switzerland. After 4 months, I traveled back to Switzerland, and it's quite nice to be back for a while now. But we have in Switzerland the banking license, and in Singapore a capital market services license. So we focus on the asset management piece out of Singapore. That's the clear distinction. What are the differences? I think there's very deep tech talent in Singapore, great projects such as, also in the decentralized space, such as Kyber, for example. I really like. On the regulatory side, I feel Singapore doesn't want to move too fast. I still think very innovative. I mean, as you know, we were part of the project Ubin Phase 5 and did the cross-border project using our DCHF and the Ubin payment network. But I don't think that they want to rush in terms of giving full clarity around regulatory frameworks on crypto in particular, but they don't want to be late either. So they want to be fast follower. So on the regulatory side, I think FINMA is a bit more advanced in Switzerland. Otherwise, from a client's perspective, I think in Asia overall, there will be more demand, and particularly also the way clients behave and what they're looking for, more agile, a bit more higher risk-taking propensity when it comes, for example, to trading or derivatives trading on crypto, etc. Is much higher demand in coming from Asia versus Europe, where we are a bit, high risk aversion. Yeah. Let's put it this way. Yeah.
And this, for institutional players as well, you see the high risk appetite in Singapore as opposed to here.
That I think that would be exaggerating. There are now some major players, banks, starting to seriously look into the space. I found also great news that you mentioned Libra before, Temasek being close now to Libra, etc. So these are good developments, but I don't feel that particularly regulated financial players are more aggressive in Singapore compared to Switzerland. On the contrary, I think in Switzerland there's a lot of movement right now. Yeah.
Good. And that's an excellent point, because people talk about in Asia, yes, more risk appetite, it's more interest, but it's more at a retail level, at institution level, regulation level. And actually here is because of the regulatory clarity, and there might be more activities here. So Alistair, do you want to comment on that?
Yeah, I disagree with Mathias in terms of MS as a fast follower. Clearly, it's all relative, isn't it? Maybe Mathias living in Switzerland and FINMA is incredibly progressive. But if you look at the top 40 regulators around the world, MS is leading the charge and really is right up there. So it is all relative. I've been here for decades. Actually, but in the capital markets. But I found this to be a great environment, particularly within the space that we're in just now. I'm out here really as a beachhead to start really developing our global international ecosystem and look for partners and help to build up this ecosystem. But yeah, I think look, historically Europe and the US has been the two regions to develop new asset classes. Asia's massively lagged. There's no doubt about that. I do really feel now, if you look, like 70% of patents come out of Asia at the moment. If you look at fintech investment, Asia is surpassing Europe and US. I think we're on the cusp of a change, and I think digital assets could be a big part of this. So I think having a setup with, we are now international. We actually have people in New York now within SDX, London, Singapore and Switzerland. But that Singapore, Switzerland corridor, I think is incredibly interesting. You have two progressive regulators, very similar economies fueled by capital markets. With a leaning towards wealth management. So I think there's a lot of synergies there, and we should see some exciting things going up between the two countries in the near future.
Yes, thank you for the insight.
I agree, by the way, Alistair, it's all relative, and in the grand scheme of things, Singapore is still very much leading the charge. Just when you compare Switzerland, Singapore, and that just, as we've operated always across these two countries from the outset, I feel there's just slightly more push on the regulatory side.
You're looking at Singapore, Switzerland. I'm looking at Malaysia, Thailand.
Yeah, you're right.
Great, yes, the both leading jurisdictions in this space. So our time is soon up, so I want to ask a few more questions. This one's more general. How does the panel think the current geopolitical and COVID-19, the macroeconomic outlook will affect? How is this affecting the development of digital assets ecosystem? Very briefly, if anyone wants to comment on this.
Well, let me just say that the post-COVID environment, or during this environment, everything is getting, especially for digital, accelerated, and we're starting to see projects that will accelerate to see if it's going to be potentially successful or potentially not successful. But it's still too early to determine the viability. I also think that we live in a very interesting time, because whenever you look at any transition or in technology, if we look at the dot-com bubble burst, it took many years before the real winners came out. So what we can say now is that it is accelerating the potential outcome, but we still will see the outcome come in several years.
Thank you, Juan. And yes, our time's up. So just a last question, very briefly to everyone. So look into the future. How do you think our industry will develop, and especially in terms of mass adoptions? Everyone talks about this. It's very hard to predict when this will come, but let's talk about how it looks like to everyone with being different ecosystem players. I guess they look different to different players. So maybe let's start with Anton.
So personally, I'm extremely positive, extremely optimistic about the future of digital assets in our ecosystem. I do have to say that I always think it will come a lot faster, but then I'm disproven, that it always, but this is typical startup environment, and we all are here kind of startups one way or the other, if you think about it. And it just always takes everything takes a lot longer than expected, which makes me a bit unhappy, but that's life, we got used to it. And I really see the future where all the assets are tokenized. They're all on the blockchain exchange very smoothly, very fast. And the technology that we discussed today, the problems that we discussed today, will be completely irrelevant once we actually can apply this great technology.
And other panelists?
Yeah, I agree with what Anton has said. We always probably overestimate what happens in the next year, but underestimate what will be in 5 years. And sometimes that can be a bit frustrating, being founders of startups, but ultimately we'll make it, right? So, yeah.
Yeah, I think we're all going to be fairly aligned in our views on that. And just tying in with the other question, I do think, COVID, I think the the COVID pandemic and some of the fraud that's gone on there recently and the difficulty with payment is going to accelerate, digital assets. You look at the return on equity and the challenges around Basel, for the banks, that is, encouraging a focus on digital assets. So we have the move and the technology being ready, and there's these macroeconomic factors and regulatory factors. It feels kind of like a perfect storm to really accelerate this. But yes, I think we're on the right track.
I think my final statement would be that all industries will have a form of digital asset.
Great. So I also share this sentiment. For new technology, especially revolution like blockchain, DLT, it takes time, also resistance maybe in the beginning for the traditional economy and the new economy to meet in the middle. But once they do, there's no turning back. We are going digital. So this has been really fascinating panel discussion, and it's a great pleasure to pick the brains or the best minds in the industry. I learned a lot, and thank you so much for being here, and also thank our organizers, NexChange, flovtec, for making this happen. But most importantly, thanks to all of you, our audience, for being here with us, and thank you so much for your time and interest. So if you have any questions, thoughts, we would love to hear from you. Thank you, everyone. So I guess it's time to love you and leave you to say goodbye. So
Thank you. Bye.
yeah, bye from Zurich.
Bye.
Bye-bye.
Bye.
Bye-bye.
Thank you.